Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is being dumped again, stock indices are weighing the pros and cons, gold has taken up arbitrage, and Bitcoin is trying to get back in the game. The US dollar came crashing down to earth after the release of the US jobs report. Modest July employment growth and downward revisions to May and June convinced investors that the economy was cooling. Derivatives increased the chances of the Fed easing in September from 35% to 93%, while the USD index tumbled. Donald Trump's firing of the head of the Bureau of Labor Statistics for allegedly falsifying data, and his calls for Jerome Powell to resign, added fuel to the fire of the US dollar's decline against major world currencies. The White House is gaining more power. In such conditions, investors are rightly demanding a higher risk premium from US assets and increasing the volume of hedging operations. This contributes to the resumption of the downward trend in the USD index. The further cooling of the US economy and the approaching date of the continuation of the Fed's monetary expansion cycle make the outlook for the greenback bearish. The S&P 500's pullback after disappointing US employment statistics allowed investors to switch into the buy-the-dip mode. The FOMO strategy continues to dominate the stock market. Major players doubt whether the broad stock index can continue its rally amid the economic slowdown. The crowd is taking advantage of their sluggishness and increasing their long positions. Bulls are counting on the Fed to ease monetary policy, fiscal stimulus, and positive corporate reporting. Actual second quarter results exceeded forecasts by 9.1%, the largest positive deviation since 2021. The Magnificent Seven set the tone, with profits jumping 26%. The rest of the S&P 500 companies achieved more modest growth of 4%. However, the market continues to send alarming signals. Insiders bought the smallest volume of shares in July since 2018. The market momentum index has reached an extreme. This indicates limited gains for the S&P 500 in the near future. August is a bad month for the broad stock index. Over the past 10 years, it has closed in the red 5 times. Gold quickly recovered and approached the upper limit of the medium-term consolidation range of $3,250 to $3,400 per ounce, thanks to the return of fears of stagflation in the US, the growing likelihood of a Fed rate cut in September, and frenzied demand in China. The employment subindex and surveys of purchasing managers in the services sector has fallen for the 5th time in the last 6 months, while prices are rising rapidly. Stagflation is good for gold, as low growth prevents the Fed from tightening while inflation is eroding the value of dollar assets. Precious metals are used as a hedge against inflationary risks. Significant premiums between the spot and futures markets allow Chinese traders to close futures contracts through physical delivery rather than reverse transactions. As a result of these arbitrage operations, Shanghai's gold reserves have jumped to record levels. After a long period, the outlook for gold has been looking more bullish. While Bitcoin is trying to return to its previous consolidation range of $116,000 to $120,000, the crypto market infrastructure is improving. The Commodity Futures Trading Commission has authorized spot trading of digital assets on officially registered exchanges. The list of tokens is currently being finalized. They will be traded alongside traditional assets and regulated by the SEC. The leading cryptocurrency is no longer growing as fast as it did in the past. Back then, crypto whales set the tone in the market. Now their role is gradually shifting to hedge funds, financial managers, and crypto treasuries. The largest of them, Michael Saylor's Strategy, made the 3rd largest Bitcoin purchase in history. The key event of the week up to the 15th of August will be the release of US inflation data for July. Further acceleration in consumer prices due to White House tariffs could be an obstacle to lowering the federal funds rate. A decrease in the chances that the Fed will resume its cycle of monetary expansion in September will allow the US dollar to rise. Conversely, anchored inflation or its slowdown will give the Fed a free hand in easing monetary policy. The futures market believes that the central bank will take 3 steps along this path in 2025. This will give bears on the USD index an opportunity to resume their downward trend. The US negotiations with Russia will be of great importance to the markets. New sanctions and secondary tariffs for countries buying oil from Moscow could push up Brent and WTI prices. This will increase the risks of accelerating US inflation and force the Fed to be cautious about lowering rates. The main beneficiary will be the dollar. Other events to highlight include the Reserve Bank of Australia meeting and the release of data on the British labor market and GDP. The GDP statistics for the Eurozone and Japan for the second quarter will show whether these regions have experienced a decline in their economies. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.